Hello and welcome to Algin's Market Commentary. My name is Jason Martin. I'm the Chief Investment Officer and Portfolio Manager of Algin Financial Services. We're going to be going over current financial markets and economic conditions. This is part one, which covers the strength of Charles Schwab. So a lot of our clients have been calling us concerned, as justifiably so, as there's been quite a few negative things going on in the market, especially in the financial sector. So I want to take this time to be able to express to you the strength of Charles Schwab to ease any of your concerns out there. I'm going to go over some fundamental data and some technical data of Charles Schwab. This is some of the information that they've sent to us recently to spread to our clients. In general, Charles Schwab's client assets are at $1.4 trillion as of August 31st, 2008. The most recent quarter, which was the end of June 2008, their quarterly earnings were up 22%, and for the first 6 months of the year, their earnings were up 26%. To express some other areas of strength, if you look at their return on equity, they have a 32% return on equity that is very strong, and their pre-tax profit margin is at 39.3% for the last 3 months as the end of June 30th, 2008. Net revenues of $1.3 billion, and just to kind of compare this to some of the other weaker stocks out there in the financial sector, specifically Washington Mutual, Lehman Brothers, AIG. These are companies that are taking quarterly losses, significant quarterly losses into the billions. And as you can see from this slide, that Charles Schwab is actually having increasing quarterly earnings for the last quarter and for the first half of the year, which is separate from the trend of most financial stocks. So Schwab is prospering during this time. A big problem with a lot of the financial firms out there is that they at one time were very solid companies, but they strayed from their fundamental business model. They were basically too tempted by the extreme profits that were being made in the subprime area and the real estate area of the market, and they tended to put their too much weight on that and following the herd. While the real estate market was starting to explode and going into a parabolic move upwards, unfortunately they got away from their business model, and that became too big of a percentage of their company. And as real estate started to decline, it really hurt a lot of those companies that strayed away from their typical business model. Charles Schwab has not strayed from their business model. Their main line of business is to custody assets at Schwab on the retail side and on the institutional side. Schwab did open up a banking division in April 2003. We've had some questions regarding Schwab's banking division. As a whole, and especially on the banking side, Schwab is very conservative. It's very difficult to get a loan through them. They ask for multiple pieces of documents like past tax returns and everything that they need to be able to make sure that you have the amount of assets and the income to be able to take a loan. So Schwab has always been a conservative firm, and they're even more conservative on their banking side. To point out an area on this slide that I think really expresses the strength of their banking division, they have $21.6 billion in assets on the balance sheet as of June 30, 2008. Loans outstanding is $4.7 billion as of the same time period. Now, recently, Charles Schwab has sent us multiple PDFs via emails to ease any concerns out there with their money markets. That's another big area people have had concerns of recently. On rare occurrences within the past couple of weeks, there has been times where certain financial firms, their money markets have gone below the net asset value of $1. That has not happened at Charles Schwab, and Charles Schwab has assured us it will not happen. But here's some specific question and answers asking about Schwab's money markets. Specifically regarding Lehman Brothers, do Schwab money markets have any exposure to Lehman Brothers? And the answer is no. Schwab taxable and municipal money market funds do not have any exposure to the Lehman Brothers securities. Now with AIG, Schwab's taxable money market funds have no exposure to the American International Group. Their municipal money market fund, on the other hand, did have a 0.0003% trace of an exposure to a security supported by AIG, which it sold on 9/15 of '08, and they're expected to get paid on 9/22/08. In regards to Washington Mutual, they do not have any exposure to Washington Mutual. Now, at Schwab, a lot of our clients hold a particular money market fund that is a money market fund that's unlike most. You have to manually buy into it and sell out of it, but it does capture a higher rate of return and higher interest rate. And of those funds, the most common one that we use is the Schwab Value Advantage. They do have a very small piece of exposure to Merrill Lynch, and that percentage is 0.12%. So as most of you know, Merrill Lynch was acquired by Bank of America. So out of the three that I mentioned before, Washington Mutual, AIG, and Lehman Brothers, definitely much stronger than any of those companies. So Schwab is very transparent as well. In times like this, they are very proactive in getting us the communication that we need to be able to express or address any of the concerns of our clients. So we have already forwarded out this PDF to our clients. Now, for most of you who know me, I do like the technical side. And to show you a technical chart of Charles Schwab, going back all the way to 2005, you can see Charles Schwab stock price is in a definite uptrend. In fact, they're close to multi-year highs, as opposed to the majority of the financial institutions out there. Actually, in comparison, if you were to look at a chart of, in general, of an AIG or of a Lehman Brothers or even Citigroup or some of the other major institutions, they also had an upward trend up until about the beginning of 2007. And then from 2007, you started to see an action that was downward, similar to the one I'm drawing on the chart right now. And the majority of the financial firms out there are at multi-year lows, or just recently reached that in the mid part of last week. And as you can see, in terms of Charles Schwab stock price, much stronger than the majority of the financial firms out there. So this wraps up the presentation for the Charles Schwab strength.